Procter&Gamble is up 9.56% year to date and up 6.16% from a year ago, and has recently raised the dividends by 7%. Today, we're going to do a deep dive into the stock and fully cover the financials to see if the stock is undervalued and is at a bargain price. We will look at the latest earnings report, use this model I've built to look at their financials and its development throughout the last decade, including important financial ratios, use these valuation models to come up with the intrinsic value of Procter & Gamble, and look at analysts' expectations to see if it's in line with our valuation of the stock, and answer the biggest question of this video. What is the intrinsic value of Procter & Gamble? I will also give my personal opinion, so make sure to watch until the end. Before we dive in, comment on the side, as that's a new feature of YouTube, and tell me why you would put Procter & Gamble on your portfolio or why not, and see if it's in line what is being discussed in this video. So first up is the latest earnings report. We can see that the third quarter of fiscal year 2024 has a net sales of $20.2 billion. Organic sales grew 3% and diluted EPS, earnings per share, were $1.52, an increase of 11% versus the prior year. Procter & Gamble returned $3.3 billion of cash to share owners via approximately $2.3 billion of dividend payments and $1 billion worth of share repurchases. The dividend increase declared earlier this month marks the 68th consecutive year that Procter & Gamble has increased its dividend and the 134th consecutive year that Procter & Gamble has paid a dividend since its incorporation in 1890. If that doesn't give you any confidence in consistency of paying dividends, I don't know what will. Let's move on to the key financials, which I have put all in one Excel sheet. It gives a little bit of a mixed feeling. The stock isn't the greatest in growing its dividends by a whole lot every year, but it has been paying out dividends for more than 120 years. The dividends grew from $2.45 to $3.68, an annual growth rate of 3.56% like mentioned here. We can see that the rise in dividends really kicked up a notch over the last 3 to 5 years, as we can see the 5-year dividend CAGR of 5.72%. To be able to pay out these dividends, free cash flow has to keep on increasing too, because remember, dividends are paid out of free cash flow. Having a 10-year free cash flow CAGR of 3.85% and a 5-year CAGR of 5.72%. Notice how both the 5-year dividend and free cash flow CAGRs are both exactly the same. With a lot of hiccups, we can see that both earnings and revenue per share are increasing. A company has several ways to use its free cash flow and give it back to shareholders. One is to pay it directly by paying out dividends. Another way is more indirect, by buying back shares, making your share count larger and thus making your shares more valuable. In 2014, the total amount of shares outstanding was 2.7 billion and in 2023, 2.35 billion. Make note, most of the free cash flow is being used to pay out dividends, as the free cash flow payout ratio is close to 63%. Procter & Gamble has a starting dividend yield of 2.51%, paying out $4.03 per year. So now that we have a better understanding of the overall financials of the company, let's answer the biggest question everybody wants to know. What is the intrinsic value of Procter & Gamble? To answer this question, we're going to make use of these valuation models, but before we do that, do me a favor and hit that like and subscribe button. It would mean a lot to me. Like always, we start off with the discounted cash flow model. We're going to use this model in 2 steps. The first step is to calculate the intrinsic value. By plugging in the historical free cash flow and using a growth rate of 8% and also a discount rate of 8%, we can calculate the present value of the future free cash flows. By adding the cash and cash equivalents and subtracting the total debt, we get an equity value of the company. By dividing this by the total shares outstanding, we come to a price per share of $142.39. Step 2 is to find out if the dividends paid out are actually sustainable. For this, we need to put the dividends and free cash flow per share next to each other. We can see that the dividends are slowly creeping up to the free cash flow per share. I would have liked to see a faster growing free cash flow than dividends, as this would give an indication that the dividends can be raised by a lot in the coming years. Here we can see that the free cash flow payout ratio is between 50 and 75%. Next up is the dividend discount model. This values a company based on its future dividend payments. Using a discount rate of 8% and a growth rate of 5.5%, we can calculate the stock price, giving us a price per share of $169.90. The third and last valuation model we will use is the multiples valuation model. Using the price to earnings ratio of these companies and the earnings per share forward looking of Procter & Gamble, we come to an intrinsic value of $176.35. I don't just want to evaluate Procter & Gamble using other companies, but also compare the company to its own history. So let's take it a step further. I want to know how the price to earnings ratio has been doing over the past decade. Remember, the lower this ratio, the cheaper the company. And we can see the ratio slowly rising in the last 4 years. After calculating the intrinsic value using numerous valuation models, we come to a stock price of $162.54. This is higher than the current market price of $160. This might indicate that Procter & Gamble is a buy, but just like Benjamin Graham, the mentor of Warren Buffett, suggests, we make use of a margin of safety of 10%. This makes the acceptable buy price $146.29. Despite this, I believe Procter & Gamble trades at a premium, as it has proven itself time after time and being able to pay out dividends since 1890. And this says something about the company. Personally, I tend to look for a company with a higher growth rate in both dividends and free cash flow, making the dividend snowball roll faster and faster so I can eventually live off of my dividends, as that is my main goal. What are your thoughts on the stock? Let me know in the comments. And that is it for this video. If you made it this far into the video, please consider subscribing to the channel. Thank you so much for watching, and I'll see you in the next video.